If you ever had questions about asset-backed securities, you're not alone. Asset-backed securities are complex financial products, yet at the same time are heavily invested in by some of the most successful investors on Wall Street. In this video, we're going to cover the basic types of asset-backed securities, as well as give a general overview of how they're constructed and their market. And if you stick towards the end of the video, we'll also go over some positives and negatives to look out for when it comes to asset-backed securities. Asset-backed securities are a type of fixed income product where the purchaser receives periodic interest payments. If you're unfamiliar with fixed income products, we recently did a video explaining what they are that you can click on here. Asset-backed securities are always backed by an asset, as the name implies. These can be mortgages, loans, and other debt of varying types. Asset-backed securities are generally structured where a borrower approaches a lender and the lender makes a loan. The lender then sells that loan to an aggregator who buys multiple loans from different banks of different debt types. The aggregator then constructs a fund, which is the asset-backed security, and sells shares in that fund to investors. The fund pays those periodic interest payments to the investors. The lenders generally continue to service the loans and send the interest payments to the aggregator. The aggregator then utilizes those interest payments to make the payments to the investors. Asset-backed securities are generally structured so that there are layers, also known as tranches, with the senior layer being the most well-rated, usually a AAA or AA rating. There's then a mezzanine layer, which has a lower rating, and an equity layer, which has a lower rating and generally bears most of the risk, but generally has higher returns. As previously discussed on the channel, the fixed income market is one of the largest financial markets in the world, even larger than the stock market. Of that market, asset-backed securities, which includes asset-backed and mortgage-backed securities, make up 38% of the fixed income market. This market is heavily played in by institutional investors, which are some of the most successful on Wall Street. The first major type of asset-backed security are mortgage-backed securities. Mortgages for mortgage-backed securities are generally divided into RMBS, which is residential mortgages, and CMBS, which is commercial mortgages. There's been a lot of regulation that came into this market post 2008, increasing the security and strength of the mortgage-backed security market. There's generally two ways that these products are structured, either as a pass-through, which is where the mortgage-backed security generally functions like a trust, and interest payments go straight from the trust to the holders. And then there's the CMO, or commercial mortgage obligation type structure. This is more of that tranche structure that we outlaid on the earlier slide. And this can include varying levels of risk, maturity, or etc. for the type of product. Mortgage-backed securities are as safe as the underlying mortgages that they are based on. And the general structure, once again, is the same. Bank makes a loan, loans are sold and packaged, and the security is sold to investors. The next major type of asset-backed security is a CLO, or collateralized loan obligation. This is very similar to a CMO of the MBS type product, but it is made up entirely of commercial loans. These loans are generally leveraged loans, which means that they're loans taken by companies for merger and acquisition activity, debt refinance projects, or other type loans of that nature. To date, no U.S. or European leveraged loan CLO tranche, originally rated AAA, has ever defaulted, according to S&P Global, and that was this year, 2022. These are generally stable products, and once again, they're as good as the underlying loan. They're generally seen as a little bit more risky than mortgage-backed securities. However, the risk profile is still generally low, and the historic default rate is extremely low. The last major type of asset-backed security on our list is the collateralized debt obligation, or CDO. These, as opposed to strictly mortgages or strictly commercial loans like our previous entries, contain multiple types of debt. They can contain mortgages, car loans, credit card debt, lines of credit, corporate loans, leases, and even include portions of CLOs or MBS securities in them. These are generally seen as the most risky type of asset-backed security due to the underlying nature of the mixed debts, and they were a large part in the 2008 financial crisis. There's been significant regulation since. However, default rates are generally higher on CDOs than they are on the other two types of products. However, they are structured in the same way. It is merely the characteristics of the underlying assets which make them more risky. As promised earlier in the video, we're going to discuss some positives and negatives of the asset-backed securities. However, if we've gotten to this point in the video, please consider leaving a like for the video and consider subscribing to the channel to see similar content in the future. Now, in terms of some positives for asset-backed securities, they are a large chunk of one of the largest financial markets in the world. They have a diversity of issuers and exposure to different products which back them. They are held by some of the largest, most successful investors in the world, and generally speaking, these assets are quite stable and have undergone some regulation to ensure that stability over the last several years. In terms of negatives, these can be less liquid than other securities, for example, stocks or bonds. The market is not nearly as intense in buying and selling action as it is, and it is prone to contractions in times of economic downturn where the stock market is perhaps not. It is only as strong as the asset backing the security. That case cannot be reiterated enough when it comes to asset-backed securities, as some due diligence is a good thing to do in purchasing an asset-backed security. There is high volatility to macroeconomic swings, such as a housing crash or a consumer debt crash, which could affect these securities adversely. Additionally, they are somewhat complex products as compared to most offered in the equity markets or bond markets, which can throw some consumers for a loop. That concludes today's video, so thank you for watching today. We hope you enjoyed it. Consider subscribing if you want to see similar content in the future. Otherwise, thank you for watching, have a great rest of the day, and consider checking out some of the other content we have on the channel.